So the question, where does the market go from here, and what will be the main drivers? I've got a great panel. Shah, Gilani, Capital Wave Forecast Editor, and David Nelson, Belpointe Asset Management Chief Strategist. Gentlemen, thank you. By the way, folks, on Twitter, tell me who wore it best, the suit, Shah, Gilani, or me?
Good one.
David, you were a little bearish earlier in the week, and I wanted to get your assessment because when we were down to 190 points, I said we got to get David on the show.
You know, I think, everybody, the market has kind of started to price in tax reform. It's not a theory anymore. We clearly started to do that, starting in early March, and then we priced to all-time highs. I think, investors have to come to grips with the fact that tax reform is not a lock. The president is going up against several senators right now, and two of them right now have absolutely nothing to lose. And there's certainly no love lost between him and John McCain. You had Rand Paul, you had Susan Collins. I'm not going to be comfortable until I actually see legislation on his desk.
One of the theories floating around today, Shaw, is that the news is too good. Durable goods was too good. New home sales were too good. The market's been too good, and maybe that might force the Fed to be a little more aggressive than they've been indicating.
I think that was part of the mix for sure. The bonds have been ticking up a little bit. The 10-year now all of a sudden is showing a little bit of strength in terms of yield. So now, if with economic news being as strong as it is, likelihood of the Fed raising in December is a little bit higher. I think at the same time, what happened was we had a couple of companies that had poor earnings. People are assuming that earnings are going to be spectacular again this quarter, going to be double-digit earnings growth. So when companies come out and they miss, I think the market has a quick look and say, wait, maybe too many expectations have been built in.
Advanced Micro taking the semis down. That's like the worst play in the semiconductor space for the most part in terms of execution for the last 10 years. So, the leadership stocks seem to be doing pretty well, David. What are you concerned about? What do you tell investors right now sitting on big-time profits, but they're sitting on profits because they stayed the course and they've been able to ignore periods like this?
Look, the other side of the equation is, despite what I just said about tax reform, we have geosynchronous growth around the world. Let's not forget that. That means our customers overseas are doing well. That's certainly good for U.S. multinationals here. The other dynamic that's playing out is certainly the Fed. We're going to start to unwind a $4.5 trillion balance sheet, and that's the beginning of the end of the experiment that we've been doing over the last several years. Let's see what happens.
So at least half of it, the Shaw. That is cushion the blow. Gentlemen, I wish we had more time. Thanks a lot.
Thanks for having me.